All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, March 23rd. Diving right in, reviewing last week's trading, only had a small handful of futures trades, had 2 losses and 3 wins, but my 3 wins were quite small compared to the 2 losses, leading to a loss of just over 8,500 last week. My overall read on the market continues to be pretty good, but my execution has been lacking. So I need to step back a little bit early this week and reassess my situation and my approach just based on the volatility that we've been having and the chop back and forth, based on all the flip-flopping on trade war news and all that kind of stuff, and just overall geopolitical tensions going on in the market. I've been having a hard time actually capitalizing on the movements that I've been seeing. So with that, we will dive right into the charts. Starting off looking at the SPY daily chart right now, we're underneath our all-important 200 period moving average and the decreasing 9 and 20 moving averages, which is not a great look. But if we toss this out to a weekly chart, I think this is a little bit better to look at for the time being. We can see slowing momentum in terms of our overall volume on the pullback here. A doji last week after a signal candle here, a hammer candle on the 50 period moving average. So it's going to be really important to keep an eye on this. I do think we could have a bounce probably coming back up to around 582 or 583, representing about 20 points worth of movement to the top side on S&P. That would come right into the lower portion of our support and resistance line here underneath the double top formation that did get confirmed over the last couple of weeks. So still bearish, but thinking that we might have a little bit of a bounce early in the week this week to start things off. Going out to the triple Q, very similar on the triple Q, except we are just underneath that 50 period moving average. So bulls have a little bit more work cut out for them in the technology space to get back into a little bit more neutral territory and have a little bit of a bounce from the oversold conditions that exist on the daily chart. So if we put into the daily, you can see the MACD is starting to cross in a bullish formation and the RSI is coming out of our oversold territory. I wouldn't be surprised to see a bounce attempt come up to the decreasing 20 or up to the 200 period moving average, just shy of the resistance zone here from the double top formation on the daily chart. Going out to IWM, basically rinse and repeat the exact same thing. Our RSI looks very, very similar. The MACD is very similar, but it actually crossed a couple of days ago, so we'll see if we can actually get some momentum here. Basically, not interested in anything on the Russel until we break above about 207. If we do get confirmation above 207, I wouldn't be surprised to see us come up into the 216 to 218 range, somewhere in there. Going out to the Dow Jones, got some work cut out for us. We are actually pushing into the 200 period moving average already, and the 20 SMA is just above that. So even if we break above and get confirmation above the 200, there's not much room there until we start getting into our moving average resistance lines. If we go out to a weekly on this one just to see how it's holding up, it did actually hold on the 50 period moving average. So a little bit more constructive than the other indices so far. Going out to IBIT, drop this back to a daily chart because I think that's really where the story is. We've had this diagonal resistance zone for a little while, tested it a couple of different times. It's correlating with the decreasing 20 SMA. If we can get back above that, we probably will come back up and test around 52, so about $5 movement to the upside there. And that comes out very, very nicely to all of the support and resistance zones here on the left side of the chart. Very, very important price zone between 52 and about $54. I won't be fully bullish again until we can cross back above probably $54 and change on the daily chart. So definitely some work cut out for us. In terms of bounce probability here, I do think that there is maybe a slight lean to the bulls here to try to reclaim the 20 period moving average and have a little bit of momentum. But whether or not it can get enough traction to get back above this level is still yet to see. And really, it's kind of a coin flip right now. If I had to guess, I would say it has a slight edge to the bulls. but it's very, very slight. Right now, we are probably more in neutral territory than anything else on IBIT. Going out to Ethereum, pretty much same thing. This could be classified as a low base here after a significant drop, but we are overextended significantly, and we have been for a couple of weeks now on the daily chart. And our MACD is starting to curl over. It crossed bullishly deep in bearish territory, and we have kind of broken the downward trend channel here. So have a little bit of support from the MACD, signaling that we might have a little bit of a bounce here in overextended to the downside territory. Going out to Builders ETF. Had a nice big hammer candle come in that came down and wicked down towards the lows that we had previously here. I wouldn't be surprised by a rally attempt here if the S&P can reclaim itself and get above some of the moving averages we looked at, but this is a stay away chart for now. It's just not clear enough to me one way or the other, so I don't like it for a trade this week. Going out to discretionary. This one still low base, still overextended to the downside on our RSI. We are getting that exact same cross on the MACD. This is going to be a theme on pretty much every chart we look at this week. But I am starting to like the support zone that we are holding here, and it does correlate to all of this chop that we had before a nice big movement back in October, early November. So seeing if we can hold this support zone and firm that support zone up. If we can hold that level, I would give the nod to the bulls for the next week or two for some kind of a counter trend rally, but that is still an if. So playing that would be requiring very tight stops if you do decide to do it. Going out to XLK, we are starting to form up some support here. If we toss this out to a weekly chart, you can see we are below all of our moving averages for the short-term durations, and we do have a little bit of room to try to make a bounce back up to 223 roughly. But I am not super interested in playing that bounce this week. I think technology is the area of the market that is struggling the most right now, just simply because it was so overextended to the top side when this sell-off started. Going out to XLE. XLE has broken above our diagonal resistance zone, and I'm starting to actually like the look of this, especially because all of our moving averages here, you can see, have just been clustered really tight for the better part of a couple of months now. And as those flatline, they stop being significant to price. You can see price just chopping back and forth wildly over that cluster of moving averages, not paying too much attention to it one way or the other. We had a big breakdown that didn't even try to hesitate at that a week or two ago. And then last week, we had a couple of candles just smash right through it again. If we have a day or two of hesitation here, or maybe a slight pullback to retest this diagonal as support and then break out with a confirmation of the top side, I would be interested in playing that. If we toss this out to a weekly chart, just to confirm, we have gotten back above all of our weekly moving averages that are clustered up as well. So I don't mind the look here. I'm actually going to mark XLE on my chart and potentially be looking for some plays in energy this week. Going out to utilities, weekly charts, just kind of a jumbled mess. If we toss this to a daily chart to get a little bit more clarity, we have gotten back above all of our moving averages here, but this doesn't look like it has particularly a whole lot of strength particularly. If we toss in a diagonal resistance line, you can see we are still firmly below that. Really, to get bullish, we're going to have to come back above our previous high pivot here around $80 and change. Going out to XLP, consumer staples. Consumer staples had a significant sell-off 2 weeks ago to close the week, and last week basically just chopped at the lows. Not a clear signal one way or the other here. Our RSI is in bearish territory and has more room to fall, and our MACD is signaling potentially a nod to the bears. So we're going to have to wait and see if this little support zone around 78.80 holds or not. If it doesn't, is look out below because we do have more room to fall on the RSI there. If we can get above the 200 period moving average, I'm not sure that I would actually want to play a bounce here just because the moving averages overhead are so tight against it. There's not a whole lot of open air above us. So I'm going to mark this as a stay away this week. Going out to communications. Communications, nice low base here. If it breaks to the downside, there's not a whole lot of room to fall before we get down to the 200 period moving average, which would probably end up being a nice buying opportunity, at least for the short term. If we toss our diagonal resistance on our chart here, we can see that correlates with the 100 period moving average marked in orange, and then just above that is the 50. So I'm not super interested in playing the dip on this on the daily chart. If we toss that out to a weekly chart, you can see we are below both of our short-term moving averages as well, and there's not a whole lot of room to bounce. We aren't overextended at the downside here on the weekly chart, so I'm marking this one as a stay away as well. It's shaping up to look like there isn't going to be a whole lot of clear trades this week unless you want to counter trend trade, meaning taking trades in the opposite direction of the prevailing downtrend. So, which isn't typically advised, especially for new traders. If you are new to trading, you always want to trade with the prevailing trend, and that means that we would be looking for bounces to then sell, looking for the next down leg instead of trying to play the actual bounce itself. Going out to XLI. XLI fighting to hold support right here at the 200 period moving average. It closed last week just below it, but that's close enough that I'm going to say it is right on that important moving average. We are also right on top of the 50 period moving average and right at our really important support zone from the previous bounce attempt. We do have a diagonal resistance line that if we take that and extrapolate it a little further out, would give us a little bit of room for a bounce here potentially. Going back to the daily chart, we would have to clear through a couple of significant moving averages for that, so I'm not super interested in playing that in industrials either, honestly. Going out to XLF. XLF, we had a significant bounce, came back up into our 100 period moving average and decreasing 20 period moving average. And then we just kind of chopped for the majority of last week. Didn't give up much ground, but didn't gain any either. We were overextended to the downside earlier last week and then came back out of it. I'm going to say I am not super interested in XLF either. This might end up being a week to just kind of sit on our hands and not do a whole lot, waiting for new setups to develop. Going out to healthcare. Healthcare, kind of a choppy mess. I'm going to mark this one as just basically neutral. We did have a breakout attempt here that failed 2 different times. We had wicks coming up above that level and just couldn't hold it. That led to bears getting control, driving it back down into our support zone from our previous pivot here. And now we're just kind of caught inside the moving averages, getting pinched in between our all important moving averages here. So I don't have a strong read one way or other on healthcare. Going out to gold. Gold is pushing up to all-time highs, sitting on top of its 9 EMA. You have to give the nod to the bulls here because of that. Our 9 is our momentum indicator. So as long as we hold above the 9 on the daily chart, we should expect higher prices to come. If I had to guess, I'm assuming that we are going to continue sideways for a little bit longer before we actually have any kind of a breakout on gold. And on silver, we ended up actually having some weakness come in last week and have actually switched to a little bit more bearish. You can see on our RSI, it is fighting with that neutral line between bears and bulls right at 50, which is in the middle of our 0 to 100 ranking for the RSI. And our MACD is trying to put in a little bit of a double top right here. And if that crosses over and starts lower again, that could signal weakness in the actual price chart. Going out to the US dollar, we can expect probably a little bit of a bounce here, but we do have the moving averages, the 20 SMA and our 200 SMA right above us. If we can get above that, there is a pocket that could get filled here, especially coming out into our diagonal resistance zone right there. If the dollar does go on another tear, that would probably put a little bit of pressure on equities. But overall, it's looking like a bounce attempt is likely. We do have the 200 period on the weekly chart just below price action as well that should offer support if we do break down further. Moving out, looking at our heat map from FinViz here. This is a 1-week performance showing where money has been rotating. You can see finances down here in the lower left corner had some nice gains last week. Tech was kind of a mixed bag, some places selling off, some places gaining a little bit back, and the rest of the market was just a jumbled mess, except for that energy sector that we looked at this week and decided might have some plays. So again, I think this is confirming that energy is going to be the place that I am most interested to drill down into individual stocks and look for potential plays this week. Last but not least, let's go out to Forex Factory, check out our economic calendar. We do have a couple of reports. Our PMI data is being released on Monday, then nothing on Tuesday and Wednesday. Thursday, we have final GDP and unemployment claims, and Friday, we have our core PCE price index. Nothing from Trump listed in terms of speeches or press conferences yet, but again, pretty much every week since he took office, he has had some that have popped up midweek that have not been listed and get listed later in the week. So make sure you are checking back on forexfactory.com and looking at the economic calendar to see if anything gets scheduled that isn't being scheduled right now. So with that, guys, trade safe. As always, let me know if you have any questions. Hit me up in the comments. Give a like and subscribe if you want. I would really appreciate it. And I will catch you guys in the next week.